Hello everyone, and welcome to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to this Motor Trade Radio special. We're delighted to welcome back Derren Martin, Director of Valuations at CAP HPI, joining us for his roundup of how trade values performed over the course of January. So welcome back, Derren. I know you've been busy number crunching and putting the finishing touches to the editorial over the last few days. And I also know listeners will be keen to hear if you've got some positive news for them.
Hi Curtis, hi Phil. We have a live product, but we don't necessarily crunch the numbers over the last few days, but some of the crunch.
Oh right.
Just to clarify that. But
crunching daily,
yes. Yeah, exactly. But
you've been crunching words.
Yeah, we cut off the live values to give those monthly customers the snapshot. Been writing the editorial, which there is some positivity certainly. So it's a very small drop at 3 years, 60, which is 0.1%, which is negligible. It's less than £100 on average. And as ever, there's lots of moving parts within that. But we're certainly seeing that as a positive sign after what happened in the final quarter of last year, where values dropped by over 10% in 3 months. So it's certainly stable, and that's one of the most positive Januaries that we've had over the last few years. So definitely some more than green shoots, definitely.
And I mean, you mentioned there 0.1% down, and we talk about devil in the detail every month that we do catch up on these interviews. And I mean, do you want to talk us through some of because obviously, we saw some big movements last year at the end of the last year in terms of where the market started to realign, and we went into the final quarter of 2023. And there was this expectation, when was the market going to start to pick up again? When were the buyers going to return and start stocking up and things like that? Do you want to talk us through some of the numbers? Because, it's not all, a fairly level market, but there are some ups and downs through the market, aren't there?
Yeah, definitely. So, I think for when it was going to recover, we saw some recovery in December. Because December is usually a fairly weak month. It wasn't as weak as October and November, and there were certainly some buyers out there. And there's certainly some buyers that took advantage of some of the low prices, and they're feeling quite good about things at the moment because they bought cars in December, and obviously a lot of the remarketers are putting their prices up in January. So if they stocked up, then that's sort of great news for them. Sort of the headline figures. That obviously the 0.1%. At 1 year old, it's 0.5% down. So slightly more, a couple of £100 there. Maybe a little bit of sort of OEM activity and some late plate volumes coming in, and some new car sort of comparisons to be made. There's some keen new car deals at the end of December and carrying on now, really. Looking at sectors, so we've got 3 of the smaller car sectors, so city car, super mini and lower medium are all positives this month on average. So you've got super mini leading the way there at 1.1% increase. And obviously they're price point cars that are bread and butter for the dealers, that they know they can move quickly, low risk, low price. So they've done very well. Obviously the largest sector is SUV, and that's stayed level on average at 3 years, slightly down 0.6 and 0.7 at younger ages, 1 year and 6 months. But overall, positivity across the board, really. Nothing has come down dramatically. Convertibles are the weakest sector at 1.7% down, but that's not unusual for a winter month either. So it's good across the board on the values, and that's based on the data that we've been receiving, the sold data we've been receiving. Started off a little bit weaker. We were 0.5% down around the 9th, 10th of the month, and since then we've seen a recovery. And if it had been another couple of days for us to cut off live before monthly deadline, it would have probably been a positive month. So those live customers we'll be seeing that over the couple of days before we actually publish. So there will be some strength there because it's improved as the month has gone on.
Yeah, I was going to ask that, how the month, because sometimes you can sort of watch, as you say right at the start, it's a daily product, and you're sort of seeing as the activity plays out through the month as the market shifts. But as you say, this first period of the new year, it's just slowly, week on week, day on day, the activity is just starting to pick up into it. And by the sounds of it, that's exactly what you've seen in the data.
Yeah, definitely. Well, the retailers have been, they were sort of okay to start off with. There was some buying over Christmas period. We actually saw, so obviously since COVID, everything's gone more and more online. We saw over 50% more sold data over that 2-week Christmas period than we did in 2019 because it's easier to buy cars over that period now. You don't have to go out and you can do it from the comfort of your home or your office. So so we saw some activity then. Then as the month progressed, retailers are feeling back that it's definitely picked up, especially after that sort of from that first weekend, sort of the 6th, 7th of the month. We saw retailers feeling pretty good about stuff. So they've been stocking up. So we've seen remarketers putting their prices up, but retailers still buying from them because the activity, I mean, it's not through the roof, retail activity. From the conversations we've had, they're kind of describing it as better than okay, good, those sorts of things. Nothing, no sort of better superlatives than that, but it's still very healthy and feeling like a good January.
And Derren, turning to fuel type, EVs obviously under pressure last year in terms of values. How did they perform over the course of January?
Yeah, that is another interesting one. And I get a few messages saying, I hear EVs are now doing well again and things like that. We're still seeing electric vehicles as the weakest fuel type, well, along with plug-in hybrids. So if you took electric and plug-in out of the overall average figures, it would have been a small positive movement for petrol, diesel and pure hybrids. Electric vehicles have come down 1.8% at 3 years, 1.9% at 1 year. And plug-in hybrids have come down by 1.8% at 3 years and 1.7% at 1 year. So there is some weakness there. That's equivalent on electrics to nearly £450 and over £500 on the plug-ins. So it remains quite mixed, that EV world. The thing is, there's a lot more volume coming back in now. You think about 3 years ago, there was something like a 200% increase in registrations. 4 years ago now, 2020. Yeah. And since then, registrations have just been going up and up. So those cars are now coming back into the used market. There is consumer demand, but there isn't enough consumer demand at the moment to mop up all of that volume. So dealers are wary. They're not buying EVs in bulk like they are those ICE city cars, super minis, lower medium cars. So it is mixed, and there has been some positivity. We've seen Nissan Leaf, Renault Zoe, they've not moved in January, so level for them. The Mercedes-Benz EQC, the electric version of the i3, and Mini convertible electric, they've all actually gone up in value this month. But then on the flip side of that, you've got Audi Q4 e-tron, the Genesis GV60, the Aura Funky Cat, the ID5 and the ID Buzz, and they've all come down by 4, 5, 6%. So it's really bitty in that sort of EV world, but it's certainly not all positive. There is, as I say, there is demand, but there's also plenty of supply. Tesla, we always talk about Tesla, the Model Y, starting to see more of those come back in, and those values have dropped by a couple of percent. The Model 3 looks better value for money than it has done certainly in the past. And really nice car at really reasonable prices now. And that's not moved by much. That's only come back down by 0.4% at 1 year old and just over 1% at 3 years old. So lots of different moving parts within that EV world, but it is definitely the weakest fuel type, along with those plug-in hybrids, which themselves look a little bit expensive as well. So it's going to be a fascinating year for EVs because of the ZEV mandate, the OEMs, how they going to cut their cloth with that. Are they going to reduce ICE? Are they going to send a lot of cars to Motability and rental if they want them? There's obviously some very keen incentives for new electric vehicles as well, which almost makes it, why would you buy a used one if the deals on new are so good?
Yeah, and I was interested in what you were saying there about some of the price drops within the EVs, things like the VWID Buzz, which is still a new car, and that came down by 5.9%. And the Aura Cat, still a relatively new car to the used market, again down 5%. So some interesting trends there amongst some of the newer vehicles coming into the used sector.
Yeah, certainly on the Aura Cat, that's based off a lot of some of that is based off the new car activity on it. We've seen some big reductions in the new car world. So it was sitting quite high with its
Right.
value. So there is trade data showing that it's weakened, but there's also that new car comparison.
Yeah, and just looking at other fuel types, any standouts for amongst PHEVs, hybrids, petrol and diesel?
Yeah, well, PHEVs have come down as well. As I say, they look quite expensive compared to some of the other cars, and they obviously haven't dropped by as much as electric vehicles. So maybe in comparison to electric vehicles, they look a little bit too expensive. Maybe petrol's actually level at 3 years, and diesel there's a slight movement up of 0.2, but petrol and diesel demand and supply seem to track along with each other. There's less diesels around now, and supply seems to do okay with that. Demand seems to do okay to match that supply. So the story really on the fuel type is electric and plug-in hybrid weakness, and petrol and diesel, the more traditional fuel types, doing okay. Obviously the government announcement pushing things back to 2035 may not have helped with that, because consumers will think, well, maybe I'll just put that off for a little while then.
Yeah, and it's, just on your point about the EV and the mandate, you were already hearing in the first sort of weeks of the new year that manufacturers are pushing very hard into the fleets with volume-related bonus incentives for taking BEVs on that now.
Yeah.
So obviously trying to push very hard now on that. And I suppose the question is, from your perspective, and to your point made of that future values, is managing that into depends on, how heavy are those incentives going to be to push those into the marketplace, and what the impact will be on the used vehicle defleets of those vehicles as well.
Yeah, and the prices as well. You look at EVs, you've got some like the Mocha, where the EV is a long way below the petrol equivalent, and then you've got others that there's parity, and then you've got some that still you've got the EV is more expensive, and obviously everything has to have some relativity in the market. So yeah, the forecast, I couldn't tell you what the EV forecast is, because it's different for different vehicles, and some are looking going to probably fare a lot better this year than others. But those ones that look still expensive compared to the ICE equivalents are the ones that are probably going to come down by the most. And obviously it's dependent on volume coming back in as well. And you saw what happened when 15 months ago now, when a lot of cars came back into the market, then values dropped because demand dropped. I mean, it was the perfect storm at that time. But also, if a lot of volume comes back in one hit, then the inevitable happens.
There is still a nervousness about that, isn't there, as he goes head to head with BYD in terms of market share and volume, because what will they do next on prices and activity, isn't it?
Yeah, well, there's some volatility there, isn't there, and sort of the fear of the unknown. And obviously we've all seen the Hertz announcement from the US about Tesla. So they're great cars, but I guess there's just a little bit of trepidation with them. But I mean, as I say, Model 3, great car to stock at the moment.
Yeah. Now, every month, Derren, you poll the views of auction houses. What were they telling you about stock levels and demand compared to last month?
Yeah, they've had a good month. The auctions, their stock levels have increased, so they've got more cars to sell, which I guess they need that. There's 2.5 million less cars in the market than there would have been without COVID. So they need the stocks to keep coming. So positivity there. Positivity around demand. Of the ones we polled, 85% were telling us that demand had improved, and the remainder were just saying that it was level. So that's certainly a positive picture. And then over 90% were saying that conversion rates had improved. So a real positive month for the auctions. There's been lots of activity, lots of buyer engagement, and plenty of cars selling, because obviously with retail being relatively buoyant, then there's a replenishment of stock needed. So those that didn't stock up in December for January are actively buying and having to pay more for cars, but they are doing so. Certainly cars in good condition are still king, but also the ones that are sort of those NAMA grades 4 and 5, they are starting to sell a little bit more now as well. So yeah, all positive from the auctions. Probably one of the most positive surveys we've done.
And I was interested in what you were saying earlier about the level of activity from dealers buying stock immediately following Christmas Day. Is that something new this year? It was actually last year. Is this a new trend that you're seeing now?
Well, it was up on last year. I think it was up about 20% on last year, but up on pre-COVID by, as I say, over 50%. So it's improving year by year, and I guess it just depends on positivity towards January, and maybe if Boxing Day you get a lot of inquiries on your websites, things like that, then you think, well, maybe let's go and stock up. So yeah, it's fairly new phenomenon really, and obviously with the advent of online wholesale sales, then that's really helped. So yeah, definitely a positive there.
And also anecdotally, I know you talked to a lot of dealers over the course of the month. What have they been telling you about how the start of the year has been for them?
Yeah, as I say, they're happy, and there's been lots of smiles on faces. It's not brilliant. Some saying it's not as good as it was pre-COVID, but obviously that was a few years ago now. So should that even be a comparison anymore? But yeah, it's as I say, it's better than okay, and it's and most of them are saying that it's good, and they're very happy with how things are. Probably with a little bit of trepidation about what comes next, but that's probably fairly normal after what happened in the last 3 months of last year. So not maybe trepidation's too strong a word, but just a little bit of just keeping an eye on things, not getting carried away.
Yeah.
Pricing wise, they're trying to keep the prices as high as they can. Obviously, if you've bought at cheaper prices, you can afford to advertise cheaper as well. And what we're seeing as well is those cars that have been in stock for a while are still needing to be repriced. So I know there's sort of been some sort of companies saying, "Oh, you should just be advertising." Then stick to what the high advert prices are, and you'll sell at those prices. You won't necessarily sell at those prices, so you've got to make your own decision on the overage stock in particular, on whether you need to reduce. But overall, some healthy margins to be made, especially if you bought cars at the back end of last year.
Yeah, and I think what you've got to factor into some of this is, and to your point of the caution, there's still a lot of financial pressures with the dealers, interest rates, energy costs, everything else, that they've got to be very careful in terms of their stocking levels and how long they keep those vehicles on stock. So, there are other things at play that, great, it'll sit at a high price, but at the end of the day, if that vehicle's aging and they need to move some product, then they've got to move it out and get some fresh product in. So it's a very difficult balance for the retailers at the minute.
Yeah, and obviously January, you get pent-up demand. You've got maybe 2 or 3 months of last year where the consumers weren't as active. So you've got them coming back in January, and will that carry on into February and March? I mean, it generally does, but obviously, yeah, a little bit of caution from the dealers. But we do think that it will continue to be pretty healthy for the next couple of months at least.
And I mean, you mentioned February, March there, but also at the start of this, you talked about live and that because you cut off now, if you can't cut off this point in time in the month, then you'd probably be reporting a more positive increase to the values. Do you expect that now going into February and continuing into February as the market continues to pick up and the vehicles, not necessarily get shorter in supply, but obviously we know with the impact of the production losses, that starts to come into play a little bit in terms of choice of vehicles?
Yeah, so last February values went up by 1% in Cap Live during the month, and then a further 0.5% in March. So last year we actually had 3 positive months at the start of the year for values. Obviously we've got a very small negative, but devil really, as I say, in the detail, and petrol cars and have done really well, and diesel. So it wouldn't surprise me if we get similar to last year. Small increases over the next few weeks. There aren't stock levels have increased, but not by stock levels in the wholesale market have increased, but not by loads and loads. So I think we're in quite a good run up now for the next couple of months. And then obviously you've got Easter at the end of March, which is obviously the new plate month as well. So April, it could be a little bit of a softening there if volumes come back, and depending on sort of new car activity around that sort of point in time, but nothing particularly untoward. So it's quite positive at the moment. I don't think we're going to get another 2021, and I don't think we're going to get another 2023 when the values drop significantly. So stable is good, and yeah, we think that's probably what's around the corner, with possibly some increases, because wholesalers are asking for more money for cars now, and if consumer activity carries on, then dealers will need to buy them. So we're thinking that it's quite strong at the moment. Obvious caveats around electric vehicles in that as well, around the different models, but there will continue to be strength for price point electric vehicles, but maybe those ones that are looking a little bit expensive, they might still struggle.
Fantastic. And for the listeners, we always talk about obviously the editorial. This editorial, although we are recording ahead of it today, it's available on Monday, the 29th, and really you can either find it on the CAP HPI website at cap-hpi.com, or through your social channels, yours and your colleagues. They normally hit the social channels. They can find it there, can't they?
Yeah, we'll share it on LinkedIn on Monday.
Yeah.
But it's available on the website from early Monday morning.
Yeah, and the other thing we need to sort of mention is the webinar, isn't it? Because that's next Tuesday at 2 p.m. in the afternoon on Tuesday the 30th. But there was a change from Zoom to Teams, isn't there? So if those people that may have registered for Zoom or would normally register, then there's a new link that they need to register to get the Teams this time.
Yeah, that's right. Yeah, we've had a few technical issues with our Zoom license.
Sounds like our podcast.
Yes, yeah, we can empathise.
Yeah, so we've had to send out a new link. So yeah, if you've signed up maybe a couple of weeks ago, or probably less than that actually, we sent out a new link this week. So on Monday or Tuesday. So yeah, if you signed up previously with Zoom, please go back and sign on Teams, because if you go on the Zoom link, well, you won't go on the Zoom link. It's on Teams, and anybody is welcome to do that. And if you've not had an invite, then please look me up on LinkedIn, and you'll see that I've shared the link on there.
Yeah, and those that haven't previously signed up to the webinars or have missed it, then head over to Derren's LinkedIn and register anyway. If it is your first time, you've not registered at all already, then it's always worth that time for an hour next Tuesday to check that one out. But I've definitely checked that one out. But we'll put it on the newsletter on Monday as well. So if you are subscribed to the Motor Trade Radio newsletter, then we'll share the Teams link, the relevant link, where you can either amend what you've already registered for or sign up for it fresh with that one as well.
Yeah, we cover off a bit more detail than I do on here. We also cover off some of the economic UK stats, not necessarily automotive related, just to see how that's going. LCV, current values and forecasts. This similar to what I've spoken through today, but more detail, and also a forecast view from our forecast head of forecast. So yeah, lasts about an hour, and a Q&A opportunity at the end as well.
Yeah, definitely a date for your diary there. So, Derren, many thanks for joining us. It's always a pleasure to catch up with you and hear your analysis and views on how the month went. So thanks for joining us. But that's all for today. So many thanks for joining us on the Motor Trade Radio podcast. We're back with the headlines this weekend. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, on your podcast feed.